Hello and welcome to Donation Investment. This analysis is for Agnico Eagle Mines on the Toronto Stock Exchange as of 31st of July 2026 with a share price of 203 Canadian dollars. The full report is on donation.ca. A hold at 203 Canadian dollars and 85 cents, the highest quality, lowest risk senior gold miner. But its near-term tape is a downtrend and the entry edge isn't there yet. Medium term, it's a buy to accumulate. Long term, a strong buy on the structural gold bid and a record cash floor. Agnico is a cash cow senior gold producer and quality scores 84, best in its cohort. Second quarter was the strongest print we have carried. Record free cash flow of 1,335 million US dollars. Gold sold at a realized 4,483 US dollars an ounce against an all-in sustaining cost of 1,459 US dollars. An AISC margin near 67% at a record even though gold is off its peak. The balance sheet is net cash, 3.48 billion US dollars against 0.32 billion US dollars of debt, and the company returned a record 625 million US dollars to shareholders, including 400 million US dollars of buybacks, on a return on equity around 23%. This is the durability and cash story, not a growth story. On the sector lens, the valuation is attractive, 70 out of 100. It trades on about 7 times EV to EBITDA, comfortably below the materials-rich line of 8, on a warranted ratio of 0.875. Forward free cash flow yield is around 5 to 6%, and the forward price earnings is 11.5. The street agrees. Consensus is a clear buy. The mean Canadian target is 294 Canadian dollars, roughly 44% above today, and Jefferies upgraded to buy in July. That attractive valuation, paired with the record cash generation, is what underpins the medium-term buy, accumulate rather than chase. The long-term strong buy rests on the structural case, not the near-term chart. The de-dollarization and central bank bid for gold, plus a cash generation floor that holds far below the price peak. Since Agnico printed record cash with gold, about 27% off its record. Near term though, the tape is against it. The shares are in a downtrend below the 50-day moving average at 223 Canadian dollars and the 200-day at 254 Canadian dollars, and the Q2 pop to 211 Canadian dollars was fully given back. The momentum gauge has recovered from deeply oversold to 43, and the daily trend indicator has turned positive, stabilizing, not confirmed. So the short-term signal is a hold, buy on a reclaim. The dominant risk is the gold price. Gold is about 27% below its January record, and its trend is currently down, not up. The honest bear case is 165 Canadian dollars, roughly 19% below today if gold mean reverts further. Costs are the second risk. Agnico's edge is its cohort low all-in sustaining cost near 1,459 US dollars an ounce, and cost inflation that breaches its AISC guidance would erode that record margin. Third, the Barnat Pit rock mass movement is real. It trims roughly 4% of annual output in 2027 and 2028, though cost guidance held, and the multiple, while attractive, is a premium one for the sector. It needs gold to cooperate. The hard stop is 185 Canadian dollars, about 9% below today. Now weigh the risk against the reward. The bull case is roughly 47% above today, the base case, the most likely, about 23%, and the bear case a fall of about 19%. So you are risking about 19 to make 47. So, our call on Agnico Eagle Mines on the Toronto Stock Exchange. Hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donation Investment at donation.ca. The link to the full report is in the notes below. Have a great day.